Welcome everybody to the ARMR Report. It's Friday. This is the week in review. ARMR Report stands for Algorithmic Risk Management Research. What we're doing on this show is sharing with you quantimental investing techniques. It's the combination of quantitative information and a fundamental foundation. What makes money in the equity markets, what helps you grow net worth, is having an information edge. It's been like that since the dawn of the stock market. And the edge today comes from the combination of quantitative analysis, AI, computer learning, and a fundamental foundation and understanding of balance sheets, income statements, and management teams. That's what I'm trying to provide for you. Now look, all the information I'm sharing is information I use every day in my own portfolio and for clients that I have the joy of working with and managing their capital. So this is a live trading desk, a live look-in. I got computers around me. The phone might ring. Bear with me if I have to pick it up. Today we're going to cover a couple of topics. I'm going to keep harping on this quantimental approach so you understand what it is, and we're going to review the 7 indexes that we use to drive our risk management decisions. These are all exchange-traded funds that we use in our portfolios. We have algorithms designed for the volatility of each of these indexes. And when we look at them combined, when we get confluence, that's when we act. And for those of you who are receiving the ARMR Report action alerts through email, what you're going to get from me is an email when big changes occur with this quantitative analysis. You're not going to get emails every day or every week. I'm not going to fill your email box up. That's what drives me crazy when I subscribe to different email services. They feel like they got to give you information constantly and they just drown you in that information and it really gets you nowhere. What I'm going to do with the ARMR Report, and by the way, you guys can just go to our website, rosenthalcapital.com, and subscribe. So I'm only going to send something to your email box when it's actionable information. So today we're going to go over what those 7 indexes look like and how it changes our risk exposure, if it does at all. And then I'd love for you guys to join me on the Cannabis Couch on this Friday heading into the weekend. We all know the symbiotic relationship between cannabis and a couch, but in the investing world that we're living in today, I'm thinking more of the psychiatrist couch for cannabis investors. So join me, and we're going to go over the impact, the real impact of the Safe Banking Bill, or the Safe Banking Act, that just passed through the House this week. Okay? So thanks for being here. I appreciate you spending time with me out of your day. It really helps me order my thinking. That's why I do this. I like to try to educate. I'm certainly not telling you how to invest since I don't know you, but I'm just trying to share my 30 plus years of experience with you. And by you being here with me, it really helps me order my thinking. So I appreciate that. Thanks a lot, guys. If you enjoy what I have to say, don't ever forget, give me a thumbs up. It helps me out on YouTube. We all know how that works. Now, usually I have a bull or a bear up in this part of the screen for you guys to see. And as you may recall, on our last, might have been last week's Friday call, I took it down. We had a bull before, took it down. I said, there's just too much conflict between the indexes and our quantitative analysis for us to be bullish. It's just not a bullish market. It's not a bearish market. Okay? It's very rare that you'll see me get real bearish in a world of massive quantitative easing from central banks. So it's not that the market can't drop 25% in 3 months like it did last year at this time of year. But the world that we used to know, where a big sell-off in a short period of time meant we were going into a bear market, it's just not the case anymore. And the reason is there's nowhere for money to go. you have $15 plus trillion of negative interest rate bonds around the world, and that number's growing every day. Don't forget that. The only real way to create a massive bear market is to see rates go up a lot and give investors another place to put their capital. Right now, there's no other place to put it. So you get these rips lower, and then people start putting money to work, because what else are you going to do? And look at all these dividend payers with a 5% yield. So all of a sudden it looks good. So it's rare that I'll put up a bearish symbol at the top of the screen. But for right now, it's an empty symbol. I just can't tell you what the market's doing. And so what does that mean? Well, let's look at our algorithms. Don't forget that for the last X amount of weeks now, I think I have to go back and look exactly. I think it was sometime, I'm going to have to go back and look. You can go to my website and see, rosenthalcapital.com, and we're going to see when was our last comment on market direction, where we really raised cash. It's been a number of weeks now. And so what we're doing in the portfolio, what that means is, when I say maximum cash, when our algorithms, when our quantitative research says risk is too high for the reward you're trying to capture, it means we carry maximum cash in each type of portfolio. A conservative portfolio may have more cash, okay? An aggressive may have less, but whatever the number is for you, it means you want to hold that cash and wait for a better opportunity to deploy the assets and make money, okay? Now, don't forget the old adage that the money made on an investment occurs when you buy it, not when you sell it. What that really means is you have to buy weakness. So what I wanted to do is review, and the market's imploding right now, so I'm just trying to see why. Oh, geez. Nothing, just more political mumbo jumbo from Senator Warren. Simple fact, guys, she gets elected, the market's done. Let's just put that out there, okay? Let's move on. What I wanted to do was go over the indexes. So we have 7 indexes we follow that drive our risk parameters. And this is a perfect example. The market's imploding in a 3-minute window because some senator said something about bond ratings. It just, in a bull market, that wouldn't put the market down like this. So our algorithms have been right for the last X amount of weeks. It's been weeks now when I've said hold maximum cash. And so I'm going to show you today why I'm saying that. I'm going to let you look behind the curtain, okay, at how this works. We've got 7 indexes, all ETFs. We even have a model portfolio that we manage where all we do is invest in these ETFs. That's all we do. Put money to work when the ETFs and our algorithms tell us to be long the market, and go to 100% cash when risk is too great. So in that index, we're just carrying cash. So it's the S&P, SPY, the Dow, DIA, the NASDAQ 100, QQQ, the small cap index, IWM. It's amazing that Senator Warren piece is wrecking the market like this quickly. That's amazing. But not really. This is why we have a big cash position, okay? Then we have the Momentum Index, MTUM, the IBD 50, FFTY, and the Value Index. That covers the whole U.S. equity market for us. And that's what we focus on. So let's take a look. Let me tell you why, first, we've been in a max cash position. Take a look at the IBD 50. The IBD 50 is our leadership stocks of the small cap variety to mid cap variety, a couple big caps in there. But these stocks generally lead in a bull market. Now you could see the right part of this screen, I put in a square, black square for you, so you could see that it's broken down below that green line, which is the 200-day moving average. So it's challenged the 200-day, bounced off of it, now it's failing again below the 200-day. That's not normal behavior in a bull market. that tells us there's something wrong with leadership. Okay? Now, let's take a look at bigger cap leadership. Okay? This is the MTUM index. These are bigger cap stocks. Think Microsoft, think Apple, think those type of names. Visa, MasterCard. Okay? These stocks are in a downtrend. They've put a double top in, and they're below the 50-day moving average. Weakness again. Non-confluence. Now let's go look at the S&P. The S&P made a double top. It's trading better than the leadership because it's trading above its 50-day moving average still, but is now challenging that support. A close below the low of a few trading days ago will take out the 50-day moving average, and we'll get a lot more bearish on the market. So right now, the leadership, the IBD 50 and the momentum index are outperforming to the downside. So you're behind the scenes now. You're seeing how the algorithms work. They're all specific. The algorithms are designed for the volatility of each index, and we're getting non-confluence. Okay? That's the S&P. So now let's take a quick look at the NASDAQ. Now the NASDAQ looks very similar to the momentum index. As you can see, it's trading below the 50-day moving average now, just like the MTUM index. They share common stocks. So generally in a bull market, you're going to get leadership and momentum, leadership in the NASDAQ 100. Instead, they're leading to the downside. Never a good sign. And here's the small cap index. 25% of this index are the small cap financials. This index has been trading in a wide trading range. We went right to the top of it in front of the Fed announcement, and then sell off right after the Fed announcement, which has been the case for this index and for the whole market, quite frankly, every time the Fed has spoken for the last, I think, 3 or 4 Fed meetings. Run up into the news, disappointing news, sell off after the news. I told you that was the process we were going through last week. I showed you the chart of this for a couple weeks leading up to the Fed meeting. And so what I said to you was this. I said, look, if you look back in the last 3 Fed meetings, the market runs up into it, news comes out, news is done, nothing can move the market, the news isn't strong enough, market sells off. And so what we had was another run up into the Fed meeting and zero confluence amongst our 7 indexes. See how this works? This is information that institutions have. Quantitative analysis is information big money managers have that individual investors don't. And that's why I started this show some 160 videos ago, excuse me. It's to share with you this type of information I've worked real hard to build. I write my own algos, me and a partner. We crank away all day, every day, refining those algorithms. And I'm sharing that information with you. And this is how it works. So I'm building a new website for you called the ARMR Report. It's just a simple website that'll give you the basic facts of how this is working. You'll be able to go to the risk monitor and you'll see a red, a green, or a yellow light, right? And it'll take this information and it very simply explain to you, we're adding risk here, we're not adding risk or reducing risk. Boom, based on these indexes. All right, but for the sake of this conversation, I just wanted you to see why is it I keep saying to you guys, risk off, hold cash. You might have wondered because the market ran up and I'm not getting long, right? I mean, I have my long-term holdings, right? Don't forget this. So in our portfolios, every portfolio we have, conservative, balanced, or aggressive, we are building dividend-paying investments, passive income into every portfolio. And we think those stocks will dominate for a long time. Why? Because we have more and more quantitative easing, lower and lower interest rates, negative 15 plus trillion dollars in interest rates, right, of bonds out there. And so money has to go somewhere to get yield. And where does it go? The best blue chip stocks that have growth stories and a growing dividend. So we're always going to have those positions on. But we protect capital when the market looks like this. And we'll wait for the next window. We had a window in June 4th. Go back and look at past videos in June. You'll see me talk about it June 4th, that we're getting aggressive on the market. And we had a nice 2-month window where the market ripped higher, and we had all of that. There's times to be aggressive, times to be cautious and maintain cash, and that's where we still are. Okay, let's go to the Cannabis Couch. My favorite investing theme. Some of you may wonder, how can it still be my favorite investing theme? These stocks are getting destroyed. They're down 70+% from their highs. I love that, guys. I've been telling you guys for months to not invest in the space. For months. For months I've been saying, too much risk, hold your cannabis cash. We are going to get the opportunity of a lifetime when this weakness is over. Now, I didn't know it was going to be this bad, but I definitely came out and said, guys, when CannTrust lied to investors, the bottom was going to fall out of these stocks. And that's what's happened, right? And I just sent you all the most recent ARMR report. I sent you all the top 5 problems with the cannabis investing theme. And as those problems get resolved, I'll get more aggressive buying these stocks. Okay, I might buy in front of some of the resolution if we get a quantitative entry point. But I won't be, aggressive in the space until we get the resolution of those 5 issues. If you did not receive that ARMR report, please direct message me, give me your email, and I'll be more than happy to send it to you. It's a free report. All right, a couple big things happened this week. So in the short term, in the near term, I'm still not long these stocks. And so every day they get crushed, I love it because I've got capital set aside to buy these stocks on weakness when the time comes. And we keep doing research to make sure this is a thing we want to be part of. So what's happened this week? There's 3 things that have occurred this week, I think, that are bullish for the stocks. Long term, not buying today. Number 1, politicians are going forward with new regulations and rules. And so we saw that the House overwhelmingly passed, I'm sure you guys saw this, the Safe Banking Act. So that is a major step forward. I don't want to diminish it. I think it's great that it was an overwhelming approval. I think it's probable that we'll see the Senate confirm this and it'll become law. This will allow marijuana companies to work with banks to a certain degree, which is great. But I do want to mention some caution here. And I tweeted this out yesterday. Please follow me on Twitter if you want to know what's happening from my standpoint, from where my head is. It's at Brett Rosenthal, B-R-E-T, Rosenthal. You can always follow hashtag ARMR Report. I said yesterday that the reaction to the news is more important than the news. Right? The reaction has been a big fat dud. These stocks are trading lower. Okay? These stocks are now down towards the lows. They're trying to find a bottom, some people think. I don't know. We'll see. We don't have to guess where the bottom is. It'll show up. And by the way, I don't have to be the first one at the party. I don't have an ego where I need to buy the bottom. I don't have to buy the bottom. This is about making money. It's not about being right and going and saying, hey guys, I bought the bottom. It's about protecting capital and making money. Okay? So what I need is a bottom to form and quantitative information to tell me the risk and reward is finally flipped. The reward's big enough for the risk I'm taking and the probabilities are high enough that I'll make money for me to get involved. I'm not there yet. The problem I have with the Safe Banking Act, There's a lot of different acts that Congress has been looking at. And the Safe Banking Act is my least favorite. And here's the reason. It doesn't change the game. Example, it's not a trigger event for the canopy acreage deal. Okay? What we need as a game changer is to get cannabis off of Schedule S1. Any other schedule is a game changer. Any other schedule, Schedule 2, Schedule 3, whatever. It allows big corporations like drug companies, tobacco companies, whomever, or liquor company, whatever, to get involved in this space and put a lot of capital into the U.S. MSOs. The fact that U.S. MSOs can now put their cash directly into a bank instead of into a big bag is good for the space, don't get me wrong. But it doesn't lift any of the major hurdles for massive investment in the space. That's the problem I've got. And I'm afraid that politicians are going to pass this bill so they can go to 2020 and say, hey, I voted to help the cannabis space, when it doesn't really change the game. I don't want the politicians to stop here. That's my problem. I don't want them to think, hey, we did something, vote for me, because this isn't enough. This is just logical. Up until now, cannabis companies in the U.S. have been running around with bags of cash. All right? So now they can set up, electronic transfers and those types of things and work with individual banks. That's great. But we need more reform. A lot more reform. Did you see a study that came out today? I published it on Twitter. Go look at it. Cannabinoids look like they cure cancer. They have a cell death effect on cancer cells. This is white papers from the medical world. Go look, go read them. Colon cancer, prostate cancer, breast cancer, lung cancer. It's incredible what THC and the cannabinoids have together, the effect. And we're seeing real proof of this from real medical research. And yet these researchers don't even have access to the quality chronic. It's incredible. And we pass a Safe Banking Act. I mean, please don't stop there. We need real cannabis reform. So I'm glad that that step was taken. I'm concerned that it will be used by politicians as a way to slow down the process. And why would they do that? This is the second problem. Second development this week. It keeps getting worse and snowballing. People are dying from vaping. Now, I was on StockTwits and I'm on Twitter, and when the story first broke, I told you guys this is a problem. And I got a lot of pushback. Okay, got a lot of people saying, oh, it's just the illicit market. Oh, it's going to be great for MSOs. It's not the MSOs. I said, please, guys, I've been doing this 30 years. You're not thinking like investors. Okay? You're thinking like people who are just in love with an investment theme, and that's a guaranteed way to lose money. The way investors think is this. If people are dying from a product, I'm going to throw the proverbial baby out with the bathwater. I'm going to shoot first, ask questions later. How many other sayings can I use? Okay? That's what happens in the investment community. Nobody knows yet what's really killing people. All right, I'm reading stories. Someone's got it, but the CDC has not come out and said this is the problem. And investors think, guess what? Until the CDC tells us the problem, it could be anything. God forbid the CDC comes out and says the product came from a legal MSO. Okay? This is a real problem, just like CanTrust was a real problem. We need these issues to go away and get off the front page. And it's not going away. More people are dying, And now we have some ridiculous politicians talking about, in certain states, banning all vaping products, including MSO, right? Cannabis vaping products, banning them all. Like that's going to work. This is going to drive people to the illicit market, which is probably where they're getting the product that's killing them. But politicians are idiots, right? They're just, let's call it what it is. They're idiots. They're reactive. They constantly say stupid things. It's like, head-splitting headache to watch a politician speak. I swear to God, any politician who actually came on TV and was just honest and said what was actually happening and came up with real, honest answers to things might get elected in a landslide. But I can't find anybody out there like that today. Everyone just seems like they don't even bother hiding the axe they have to grind. It's incredible. But I digress. My point is, now politicians are saying they're going to ban vaping products, blah, blah, blah. So this is the problem I was trying to tell you about a couple weeks ago when the story first broke. Okay? So there is a company out there, CannaSafe. Take a look at that company. It's an interesting little company. It's not public. But what they're doing is they're verifying the safety of cannabis products for legal cannabis companies, specifically in California. And the more those stories get out, where they can say, look, this product is good, this product has been tested, right? The more that happens in the cannabis space, the better this space will become. But right now, we're caught in a vortex of a terrible story. We got to get past it. Now, I'm going to end this on a happy note. I saw there's a new farm agricultural bill that's being passed, and in that bill, there is a demand that the FDA come up with a ruling for hemp-derived CBD so it can be sold, and do it within 4 months. So they're right on schedule. This is a positive for hemp CBD companies, specifically Charlotte's Web. Now, some people are going to say to me, well, what if the ruling the Fed makes is negative for their business? Number one, I don't think that's going to happen. I know that Charlotte's Web and their management team is in close negotiations with the FDA, so they're on top of this and they're talking with the FDA. And I don't think the FDA is really out there to kill a business. And let's say I'm wrong about that. I do think that any regulation that sets up a standard, even if Charlotte's Web has to change some of their products to meet that standard, ultimately will be very bullish for the space. It'll get rid of a lot of pretenders, and it'll allow for big consumer packaged goods companies to buy into this space. And that's when these stocks go up a lot. When institutions and big consumer packaged goods companies feel comfortable enough to get into the hemp CBD business. Because then you start to see valuations. That's the way it works on Wall Street. Even if they don't take over Charlotte's Web, they take over somebody else, and then the street figures out, oh, that's the value. X times sales, 10 times sales, 20 times, whatever the number is. And then you can go look at Charlotte's Web and say, wow, it's trading an unbelievable undervalued situation. So what we need is that type of merger and acquisition activity into the business. And we can't get it until the FDA makes a ruling. So that's why I was very pleased to see in this new agricultural bill a demand that the FDA come up with regulations within the next 4 months. All right, guys, listen, I appreciate your time with me today. I hope you had a good week. I want you guys to have a great weekend. And I'll be back at it again on Monday, 11:30. I hope to see you. Take care.